Welcome back to the ALX Report. I'm Alex Lowen and thrilled to introduce Senjin Capital. Senjin Capital is a new fund based in Australia investing into companies in Japan. They're publicly listed companies, and I'm delighted to introduce Jamie Halse, one of the co-founders, and Dale Gillham, Chief Analyst from Wealth Within. Tell us, Jamie, tell us what you're up to and why Japan?
Well, there's just this incredible opportunity in Japan at the moment. So this is a market that has not developed like the rest of the world has. It's like what the US or Australia was back in the late 70s, early 80s, before the rise of shareholder capitalism. So you've had these management teams who have never had to care about shareholders. They've stored up 30 years worth of earnings on their balance sheet in the form of cash and real estate investments that are unrelated to their core businesses. And the government has now really pushed the button on a corporate governance reform that's been going on for a while, but really accelerated the last few years. So now these management teams that have never had to care about shareholders are starting to have to care about shareholders.
And Dale Gillham, Chief Analyst from Wealth Within, tell us about your experience with investors and into Japan.
Well, actually, when I was reading what Jamie put out, the documents he put out, I was like, wow, this is what is needed for the next decade plus. Because what we're seeing at the moment in world markets, the US market, we know it's way overpriced. We know AI has taken those, the Magnificent Seven to unrealized areas where they just can't sustain. And so the US is in a very high a point in time, which is a secular high peak, a long-term cycle peak. And that's going to happen in the next year. There'll be peak and then there'll be the crash. And that'll happen somewhere between 30 to 60% crash. We'll have that on the US. This decade, absolutely it'll happen, but it's more likely the peak's going to happen in the next 12 months-ish. And to me, that's why I got excited about reading what Jamie's document. I'm thinking that's what's needed. Because it's where do investors go? And it's like, what are your opportunities? And people, watch the news and they go, oh, Microsoft's going up or NVIDIA, I'll get into that. And we know amateur investors get in at the peak and they sell out at the trough. But what we're talking about for your fund is sophisticated investors, correct?
Yes, sophisticated wholesale investors, yes.
Yeah, so where are they investing? And they'd be thinking, well, right now, if they're smart, they'd be going, now where do I put my money? Where do I change my allocations? Do I drop down off the US market or European markets? And where do I go? And Asia is just a huge, huge opportunity moving forward. So I'm really excited about what you're doing.
And
Thanks.
Jamie, why you? Tell us about your background with Japan.
So my background with Japan goes back a long, long time to when I was about 11 and I started learning some Japanese. Unfortunately, I never progressed to full fluency, but I did get the opportunity while studying at high school to do a trip to Japan. We also hosted a student at our house. I grew up in Auckland, New Zealand, hosted a student at our house. He got to experience a bit of the New Zealand lifestyle. And then I went over to Japan and did a homestay with him, visited the local high school. And then I joined, back in 2011, I joined Platinum Asset Management, and I had a 13-year career with Platinum Asset Management that wound up with me managing one of their global funds for 7 years and then their Japan strategies for 3 years. So I was managing about $1 billion in long-short public equities. But Platinum had always invested quite heavily in Japan, being value-based and contrarian in philosophy. And so we spent a lot of time on Japan, and then I spent more time on Japan than the average analyst. The Japan fund manager when I joined was Jacob Mitchell, who's now the founder of Antipodes, a big global fund manager. And he really took me under his wing. And so I got a lot of exposure to Japan equities through that stage and really saw this super cheap market, but with these management teams that just did not care about shareholders. They had 50% of their market cap on their balance sheet in cash and these decent core businesses, but often investing money in areas that made absolutely no sense to their core business. And I'd pitch a stock that had 50% of its market cap in cash to one of the portfolio managers back when I was an analyst. And they would say, oh, but you can't value that cash. You're never going to see it. But then I started seeing some headlines about activists doing things in Japan from about 2015 onwards. And I pitched the idea at Platinum of doing an activist fund at that time. Unfortunately, it didn't get up at that time. I was just a lonely analyst. No one really was listening to me that much. But fast forward to 2021, then I was a senior portfolio manager. I was running the Japan strategies, and I just saw how the market had advanced along this process of corporate governance reform and created this incredible opportunity for activism in Japan to really realize the results. And that cash that was stored up on the balance sheets could actually be distributed to shareholders. The malinvestment in businesses that were loss-making companies could be encouraged to stop that. And the share price returns that you can get when that happens are quite phenomenal. And then the downside in a lot of these investments is to some extent mitigated, or to a large extent, in my view, mitigated by the fact that they own so many assets. So we're buying companies at 30 cents on the dollar relative to their cash, real estate, and other investments. So when you're doing that, it's kind of like, where's the downside? It's the type of investments that Warren Buffett was making before he got too big to make them and before these kinds of opportunities disappeared in the US.
As you mentioned, it's like the 80s.
Well, yeah, and that's what I'm seeing is because obviously, the Japanese market over the last few decades, probably since before the GFC, but has been just basket case, I suppose, is the only way to talk about it. So things needed to change. Well, what excited me, and I didn't read this in your document yesterday, where it's like there's more listed companies in Japan than in the US, and nearly half of them are trading below what they're actually really worth.
Yeah.
And it's like, it doesn't get better than that. It really doesn't get better than that. And you need somebody, in my mind, obviously, as Australians looking to invest, they need somebody who understands the market.
Oh, definitely.
And you do. And Toby, your co-founder, tell us about him and why you've chosen to work together.
So my co-founder, I needed a Japanese person to help me with the strategy, to do work on the engagement with the companies, because it's an activist strategy, right? What we are doing is we're looking to achieve a result to really unlock that value. Because Japan is full of value traps. There's a lot of cheap companies, but you need someone who knows how to go in there and do the hard work, engage with management, and unlock that value. So along with the engagement, we do have some secret sauce which we share with investors who sign an NDA around how we go about that. But Toby, or Tsubasa Umezaki, Toby's kind of his westernized name, I met him because when I was at Platinum, I was setting the strategy up there, and we did a global search to find the perfect Japanese national to help me with the strategy. And I had this list of requirements, and I didn't think I would tick off half of them, but he got very close to ticking off all of them. And he really is just a really interesting guy. He's got a background in corporate finance, M&A advisory, in equity sales, then with Boston Consulting Group and their private equity team. And then he worked with a Japanese-focused activist, one of the longtime activists, Taiyo Pacific, for 4 years. They're a US-based fund, but investing into Japan. And while he was there, he was actually seconded inside a rural Japanese company for 3 years and really worked to deliver operational improvements from the inside of that company. It was a large portfolio company of his employer, Taiyo Pacific, at the time. And then later on, that company actually received a takeover approach from a competitor. Taiyo Pacific acted as a white knight to take the company private, and he led the execution of that deal as well. So he's just got all this experience that ticks all the boxes. I call him a unicorn.
Yeah, well, they're hard to find unicorns, but when you find them, you got to stick with them.
Exactly.
To me, it's as a wholesale investor myself. To me, the things that I look at is, okay, so who am I investing in? And that's obviously yourself, and you're obviously co-founder of this, who's very experienced in this area. So to me, that gives me comfort. But the other thing I think about is, okay, so what am I actually investing in? So I'm buying units in your fund. But also then I'm looking at, okay, so what's the potential? To me, I'm seeing huge potential. Yeah. So then my only other question is, well, obviously, what about liquidity of the fund, et cetera, those little things. Can you speak to that sort of stuff?
Yeah, well, so I mean, the potential, when we're looking at these investments, because we're trying to buy them at 30 cents on the dollar, essentially, relative to the reasonably liquid assets, I'm not counting like the property, the plant and equipment here. I'm talking about real estate and cash and investment securities. And then you get like a nice business attached to that. So the potential we see is kind of from the point we start buying, we're targeting 3 to 4 times upside from the point we start buying. Yep. Of course, these stocks are small and are liquid, so the price moves up while we're buying. But we think on our average cost, 150% upside is where we're targeting on these stocks. And then you have downside protection some downside protection from the assets on the balance sheet.
Is that like a 1 year, 2 year, 3 year, 4 year type of outlook?
We're targeting sort of an 18 to 24 month time frame. So there is a risk it goes longer, but that's our target.
Yeah, I know when you watch shows like Shark Tank and people like that, they're going, well, where's my return of capital? I want it back in 2 years, or I want it back in 3 years. And I know, wholesale or sophisticated investors are thinking the same sort of thing. Well, okay, but 150% upside, that's huge.
Yeah.
That's massive.
And the way that our fund is set up, when we exit from one of our target companies, we would distribute all that capital back to investors, and we only receive our performance fee once investors have received their money back and plus a hurdle return.
Okay. Because your fees are, look, from what I saw, they were pretty reasonable.
Yeah, pretty in line with standard sort of private equity or hedge fund fees.
Yeah. So what management fee? What 2%?
Yeah, 2 and 20, but over an 8% hurdle.
Okay.
And only on distributed gains, as opposed to, you accrue a paper gain, you pay someone a management fee, and then this thing drops, but they've still kept their management fee. We're not doing that.
Okay. No, like I said, to me, it's like the diamond in the rough. This, like, people are not talking about Japan, and it's one of the things that Buffett talks about. It's like, buy the unloved, basically buy the unloved. And to me, I'm a contrarian in a lot of things. Is like, if they're not talking about it, then I want to invest in it.
Yep. And I mean, Buffett's put his money where his mouth is. He's gone big in some of the Japanese trading companies. But I tell you what, if Buffett didn't have to invest billions and billions of dollars in a single trade, he wouldn't have been buying into the trading companies. He would have been buying into the much smaller end of the market. And then you've seen big Australian institutional investors back Japan-focused activist funds. The Future Fund has given $1 billion to FSIMO, the largest Japan-focused activist. Yeah. Qantas Super have given $1 billion to Dalton Investments, which is predominantly a Japan-focused activist. Yep. And some other institutions like the Sydney University Endowment have also backed other activists focused on Japan.
So where does anybody find out more about you?
So you can reach out to us via email, investors@senjincap.com, or see our website, senjincap.com. Yep. I'm also quite active on LinkedIn and x.com, so you can look me up, Jamie Halse, Halse. And you'll see a lot of content. I post a lot about the opportunities in Japan, what's going on with what other activists are doing in Japan. But we are the only Australian-based activist fund. So we have an accessible Australian unit trust for Australian investors.
And the opportunity now, so where are you at with going into 2026?
Well, the opportunity now, so we've filed as substantial on one of the first companies that we're looking at. We're raising money into this fund. We're targeting a $50 million raise. We've raised just over $20 million so far from a range of investors from Australia, New Zealand, the US even, and some institutional money out of right here in Melbourne where we're shooting this. The plan going forward is to really engage with our investee companies and look to really unlock that value for our investors and for the other shareholders of the companies as well.
And you've got plans to be in Japan in January. Tell us about what you're going to be doing there.
Well, I'm taking my family up to Japan for the first time, which is going to be great. We're doing some skiing in Niseko. We've got a lot of friends going up there.
I'm jealous.
And then, it's a great place.
We come to.
And then we're heading down to Tokyo for a bit of time, and we're actually going to go visit the family that I stayed with in Takasaki. So my kids will meet my host brother's kids, and they're around the same age. So I'm sure there'll be a lot of bike riding and laughing and games and Nintendo Switch being played, Mario Kart and all of that.
Absolutely. And with Toby, what are your plans over there then? Are you going to be meeting with some opportunities? Yeah,
so once my family heads home, I'll have a week of meetings with Toby. We're meeting the CEO of one of our portfolio companies. We are meeting a lot of other participants in the space. We build relationships with everyone from lawyers to leveraged buyout bankers to people in private equity to other activists to other general fund managers. So we've been doing this for a long time and been building relationships up there very actively.
Because I think that's, from what I understand, and correct me if I'm wrong, I understand it, with Japanese it's about relationships, not necessarily about the business. So relationships come first, then business.
Yes, you need to build that relationship of trust because Japanese people are very, very wary of making mistakes. So it's kind of the opposite to the approach in the US where it's move fast and break things, the classic Facebook thing. In Japan, it's move very slowly, make sure you don't break anything. But then once you've made a decision, then you move very quickly. So it's really about that building that trust with people so they know that they can rely on you to deliver what you say you're going to deliver.
And you've got a wealth of experience for doing that, you and Toby. As you heard, it's an exciting opportunity, a wealth of experience, a wealth of knowledge, people on the ground in Japan. But do remember to speak to your advisor before you jump on to senjincap.com and speak to Jamie.